these speakers are ready to take us on a journey of understanding what is happening in Nigeria. Bear in mind that it's a series. We have Nigeria, we have Kenya and Ghana, and so we're starting with Nigeria today. That said, I would soon be introducing my speakers. And of course, after I introduce my speakers, we'll go through the Consumer Pulse survey from Rotimi, one of my speakers, and then Mr. Wole will take us through the economic outlook. Then we'll have question and answers. So come ready, have your pens ready as you're listening, but jotting down questions. We won't be taking questions while they're talking. We'll be taking questions right after. And of course, we'll close. I'll start with introducing Mr. Wole. Right. Hi, Mr. Wole. Good morning. Good to see you again. Wole Ogundare is a financial and management advisory practitioner with over 30 years of enterprise leadership across Nigeria and West African markets. So he's a guru in the African market. As founder and the managing partner of Carthena Advisory, he works with boards and leadership teams to translate economic intelligence into competitive strategy, with a particular focus on consumer goods, FMCG, retail, manufacturing, natural resources, and infrastructure, giving him a practitioner's understanding of how macroeconomic shifts translate into real commercial pressure at the brand and portfolio level. His career includes senior leadership at Udala, now Conga, Insight Publis, and Phillips Consulting. Is a fellow of the Institute of Chartered Accountants of Nigeria and holds advanced management qualifications from London Business School and Wits Business School. He's an alumni of my school. Welcome, Mr. Wole.
Thank you. Good morning, everyone.
Good morning. And to my second speaker, I call him Otumba personally. Rotimi Shoyoola is an experienced consumer insight consultant with demonstrated history of working in the African market research industry. With over 15 years experience partaking in and leading several studies across different consumer categories across the colorful African landscape. He currently heads the qualitative business at Pierrine Consulting Nigeria, where he and other team members make magic happen for clients across Africa. Hi, Rotimi. Good to have you on board.
Hi, Bukun. Nice to be
Okay,
here.
so I'll hand over to Rotimi. Rotimi, would you be sharing your screen?
Yes. Okay. Let me know if you can see my screen. Can
It's
you all see my
coming.
screen?
Yes, it is.
Okay. For the next couple of minutes. So for the next couple of minutes, I will be sharing with
You want to
you
put in a
consumer.
presentation? Oh, fantastic. You can go ahead.
Yes, great. Thank you. So for the next couple of minutes, I'll be sharing with you the consumer sentiments outlook for Q1 2026. So let's start with some background history, right? In 2020, a lot happened. The world literally shut down. COVID-19 happened, and brands wanted to track the impact of COVID-19 on consumer sentiments. And that was what birthed what we have right now known as Consumer Pulse Survey, right? So we ran a study from April 2020 to October 2020 across 3 key locations in Nigeria, that's Lagos, Enugu, and Kano, where we spoke with 18 to 36-year-old Nigerians, males and females, and basically to understand the happiness index of the average Nigerian as they were going through COVID-19, their knowledge of COVID-19, and how category consumption patterns have changed during that COVID-19 period, and their mode of payment. And later on, this metamorphosed into what we now know as consumer survey, where we track the general consumer sentiments. And we've been running this for over 5 years now, since November 2020 till date, where we track happiness index, financial index, optimism index, and the category consumption patterns of Nigerians. So what have we learned over the last 5 years? We've learned that the Nigerian happiness index has a lot to do with economic headwinds. We've learned that government and economic policy has a way of impacting the daily realities of the average Nigerian. Another thing we learned is that post-COVID-19, post-2020, the whole isolation, stay at home and all of that, we've also learned that Nigerians have become more appreciative of good health and social support systems around them. Social support systems could be family, could be friends, could be religious organizations and all of that. They learn to be very appreciative of them, and these have been major recalibrators of happiness index in Nigeria. Now, is there a link between the average Nigerian happiness index ratings, PMI, and consumers' reality? For context, what is PMI? PMI basically is a purchase manager index, and what that does is it's a level of economic activities in a country. It's a way of measuring the level of economic activities in a country. Now, a good activity, an economic activity in a country would be if it's rating at like 50, all right? Anything below 50 is poor economic activity, right? So, and how does that impact happiness index? Let's look at February 2022. If you notice, the February 2020, so the blue line is for the happiness index, the red one is for inflation, and the green one is for PMI. So in February 2022, PMI was at 57%, and no surprises, happiness index was relatively high at 68. But notice that we saw a dip. We saw a dip in the happiness index. Can you help me with admitting guests, please? We saw a dip in the happiness index in February, in March 2024, when the happiness index dipped to 51, and the PMI was at an all-time low of 49. And then it also increased, and as the PMI also increased in March 2025, so did the happiness index increase to as high as 69. And as at first quarter of this year, we're at 76%. Now, going further, we noticed that in February 2022, that happiness index was still at an all-time high of 68%. People were coming from the festive season, the excitement of Dirty December and all of that. But if you now look at, if you compare February 2022 to February 2023, there was a dip of 62. And what caused that dip? There was scarcity of Naira. We're getting to that election period. There was scarcity of Naira. And it further dipped when subsidy was removed, as announced by the president. So everything went to an all-time free fall, where as low as of March 2024, inflation was high. Currency devaluation happened to Nigeria. There was high cost of living, and everything went to an all-time low of 49%. But the Nigerian, I believe Wole was talking about the resilience of the Nigerian spirit. And if you look at March 2025 right now, the new government fiscal policy and monetary policy, the FX has stabilized the bids, and consumers have somehow adjusted. So consumer index, happiness index right now is at 69, and as at January 2026, it's at an all-time high of 76. Foodstuff prices have stabilized, and there's some marginal Naira gain. But let's not forget the fact that food inflation is still high. It still remains relatively high, because as of February 2026, food inflation is still high, but relatively lower than what we have in February 2025, where it was at. And the difference is an 11.21% less than last year. But food prices have stabilized. So that shows why the happiness index as at this point right now, 76%. However, this is driven by the appreciation of what I said before: good health, family support, and personal growth. Those are the key things that are supporting this growth, supporting this current happiness index growth. If I have good health, I can take care of myself, take care of my dependents, I can pay my bills. I can even, I might even increase my source of income. If I have my family around me for my support system, that also helps me as well. And then I'm also, driven by personal growth. I don't want to be where I am right now. I want to be a whole lot better, right? So those are the things driving happiness index on the left-hand side. But on the right-hand side, we have people complaining about financial hardship. We have people complaining about bad governance. There's insecurity in the north, which is slowly moving down to the middle belts. And we heard cases of insecurity in some places, some parts of the middle belts are as close as Kwara State. So those are sources of concern. But all the same, happiness index still remains relatively high. Now, looking at 2025 and 2026. 2025 and 2026. Let's look at the numbers. We asked the average Nigerian, are they more positive about their financial situation in the next 12 months, looking into the future? And when we asked this question in 2025, 63% said yes, they are very positive about the financial situation in the next 12 months. But we saw a rapid jump, as much as 18% in 2026. We also asked the questions, are they optimistic about their family's financial future? As at 2025, they said, yeah, which is set at 72%, but we saw a 10% jump in that belief this year, first quarter of this year. Are they more confident of the business conditions in Nigeria within the next 12 months? And we also saw an increase of 13% for this year. Are they more positive about the continuous good times in Nigeria's future? We also saw a massive 21% belief in this in 2026. Now, what is driving this financial disposition, right? Why are they positive? Why are they positive about their financial well-being within the next 12 months? Just like I said in previous slides, it's good health, better life conditions, and a lot of people, even in the formal and informal sector, now have side hustles. Nobody is depending on one source of income. So those are the things that are giving them that positive mindset that in the next 12 months, I'm good. I'm going to be good. As long as I have good health, I have a better life condition, I have my new side hustle, I'm good. Now, however, let's take notes that Nigerians are becoming more pragmatic in their spends. They are becoming more selective in what they spend money on. They splurge every now and then, but that splurging they do more selective splurging, but they're very careful about what they spend money on. We're seeing more use of public transportation. Even car owners are ditching their cars every now and then and engaging in public transportation. There's more eating at home, which speaks to selective splurging and selective spending. There's more eating at home. They now have more alternatives when it comes to entertainment via media. We have the YouTubes of this world. Nollywood is moving to YouTube now, and it's free unless you want to buy YouTube Premium. There are low-cost streaming services, the Amazons, the Netflixes, and the likes. And even the cables giants in Africa is also feeling this pinch. They no longer do anything like price increase, which used to be what we used to witness over the last couple of years, where there's always a yearly price increase. They are feeling the pinch because Nigerians now have more alternatives. They're watching more free stuff on YouTube. There's low-cost streaming services, and people are delaying on non-essential medical procedures. They're using more multiple online courses as opposed to paying for face-to-face courses. And they're budgeting. Nigerians are now downloading budgeting apps on their phone, and they're monitoring their daily budget very closely. And they're attending more public hangouts that does not require too much spend. Yeah. So next couple of slides, we'll be talking about consumer trends in 2026. I've talked about the optimistic Nigerian spirits. There's a general sentiment around optimism in spite of all the odds and everything. They expect more economic stability. They are more pragmatic with what they spend money on. If it's not adding value to me, to my life, I'm not going to splurge on it. And I also talked about, the new side hustle, the digital side hustle that everybody now has or wants to have something that they do, whether they're working remotely after they do their 9 to 5, they have a remote job that they do, or something just to put in money. We like to call them the Elon Musk guys and babes. And preferences have changed and will continue to change. Down trading is something that's going to continue to happen. And we would advise brands not to increase prices. Pricing is not a silver bullet for 2026. We've already talked about how they are very selective, how they are careful about what they spend money on. But just be physically available. Be physically available as a brand. Brand building is still important. Brand building is not a short-term thing. It is a long-term thing. You have to continue to be salient in the minds of Nigerian consumers. And then let's also explore growth via different consumption occasions beyond the normal. And then quality. Quality remains key. All right. Quality is something that Nigerian brands will not, Nigerian consumers will not compromise on. Just deliver on the functional basics. If you are, say, for example, you are a detergent brand, always deliver on the functional benefits of using that detergent brand. If I use that brand, will it wash my clothes clean? Will it give me that scent, that after-wash scent? Will it lather properly? Deliver on the functional benefits of the detergent. However, if you have to, if you have to operate at a price point where you know that not everybody can afford you, who says that you can't deliver? Who says that you can't have various price points for your brand where you can deliver on the functional benefits where that detergent washes clean, but it may not give you those added benefits of nice scent or fabric softener and all of that, but it must deliver on the benefits of clean washing, lathering, not needing to use too much to get the job done. So you can have a less, should I use the word superior offer, but it must deliver at different price points. They must deliver on what they're expected to do, whether it's regardless of the SKU or the format. That's for quality. In terms of purchase, now, what drives purchase? What benefits are you offering me? What benefit does it offer me when it comes to purchasing? Does it deliver on my expectation? I talked about delivering on expectations. Nigerians want something that, if I'm shelling out a lot of money for something, it must deliver on expectations. I don't want to shop more than once if I buy something. So when I buy that thing, it must deliver. If I'm buying detergent for my family to wash for the next couple of weeks, I have a wife, I have a couple of kids, they're in school, it must deliver on that thing. So purchases are becoming more planned and quality cannot be over-compromised. Now, social media has become a third space for when it comes to critical touch points for brands. The era of traditional media, I would not say it's gone. People still interact with traditional media, but social media is where it's at right now. So brands need to have that online presence. So a brand that offers, that makes sure that they are in the face of their consumers is really important. And social media is actually relatively cheaper to execute. We're seeing brands right now using AI to even pass their message across, as opposed to when they would get physical actors to, advertise products. Now they're using AI. I remember watching on YouTube an advert for a cooking oil brand where they use where they actually use AI renderings as opposed to using actual human beings. It saves them more money and the like. So social media is something that we cannot, just ignore as brands. And it is the law court for consumers. Social media can make or mar a brand. All it takes is for a consumer to just send a positive or negative tweet about a brand, and that could affect the brand. So as brands, we need to be active on social media. What are people saying about you? Are people even saying anything about you as a brand on social media? If you are not alive on social media, you are literally, you're literally nowhere. You're like a dinosaur. So in order for you not to go extinct, make sure that your social media presence is there. And humor will also remain a big thing for the Nigerian consumer. I've talked about how resilient we are, but let's balance humor with ensuring that in the midst of all that humor, our brand message is not lost. We're seeing a lot of situations where brands advertise using media and social media influencers and all of that. And at the end of the day, after the skits and everything, you cannot really point out where is the position of the brand. At what point in time was the brand able to ease whatever tension the consumer had within that skit? Everything just gets lost in the loss of noise. So as brands, yes, you can deploy humor. Yes, you can use a very popular social media influencer, but while you're using humor, don't ensure that you do not get lost. Your brand messaging, what your brand can do in terms of solving a tension should not get lost in all of that humor. There has to be a balance of humor and brand, and brand being the solution to whatever tension, what your consumers are going through. And yeah, let's talk about expansion of brands. All right, I like the way Brian Sharp said it. Said consumers are not loyal to brands. So we have noticed that their consumers have expanded their brand repertoire to so many things. But as long as brands deliver on the basics, consumers are not loyal to brands. Let me give you a good example. Let's say we're talking about premium lager. A regular premium lager consumer would probably take mainstream lager during the day after close of work when he's not hanging out with friends or anything, but he just needs a drink before he goes to the day. Take regular mainstream beer, all right? We take a regular mainstream beer, but when it's time for him to hang out with his friends or business contact or whatever, that is when he order for his premium lager beer, all right? So they are not loyal to brands. They are expanding even within that category. But what you need to do is focus on the human within that category. Focus on the human within that category. I'll use a great example of diapers. You are a young first-time mom. You're about to go out for a family event. Your mother-in-law will be there. Your father-in-law will be there. Your sister and your brother-in-law will be there. And you go with your husband and your child. And because you're going there, that's when you whip out a very premium branded premium diaper brand to use for your baby. All right. So when you need to do that diaper change and everything, you take out that diaper from the baby bag and all of that. They see that's a premium diaper that you're using. But when you're at home, who cares whether you're using wipes or if you're using other less premium diaper brand. But at that point in time, you need to signal. So consumers are not loyal to brands. You need to find out how, as a brand, you can meet your consumer at those different consumption occasions. Meet them at those different consumption occasions, and also find a way to expand to more usage occasions within the category. And I like what a brand like Hypo did. When Hypo started, it was known as a bleach. You use Hypo for bleaching your white shirts, you use it for cleaning surfaces and all of that. But right now, Hypo has expanded beyond just a bleach, a brand of the bleaching product to something that you can even use for cleaning toilets, cleaning the floor and all of that. It has expanded to more usage occasions within that same category. All right. And we've also seen success stories like that with the Indomie brand, where Indomie has expanded to the hungry man size, family man size, and all of that. So brands need to find a way to expand to more usage occasions. All right. So in closing thoughts, brands need to future-proof their portfolio. We need to innovate along occasions and price tiers. I've talked about different brand usage occasions that brands need to play in, and also how we need to have different price points for different pockets. This is not the right time to do a price increase. You do that, your consumers will churn. Then also invest in mental availability. The average Nigerian consumer wakes up every morning and they are bombarded with a barrage of information, whether it's from people around them, whether it's from different brands around them. Nobody wakes up and thinks about a particular brand. But that doesn't mean you should stay quiet. That doesn't mean you should stay quiet. You as a brand must ensure that you stay salient in the minds of consumers, whether below the line or above the line or in any way. Continue. It's a long haul. It's not a sprint, it's a marathon as a brand. Out of sight is out of mind. Continue to be in the face of the Nigerian consumer. And let's also consider distribution excellence. If I'm in your face as a brand, I must also, when the consumer now decides that, okay, you know what, I want to buy this brand, I must be available as a brand. Let's make sure that our distribution network ensures that I'm available in the right format, in the right channel, and at the right price tiers as a brand. And lastly, quality is not something you can compromise on. If as a brand you say, okay, in order for me to hit margins, let me dip in quality. Consumers are noticing all of that. And once they notice the dip in quality, they'll move to the next brand that can give them what they want. So instead of dipping in quality, just come with different price points. You could have, and I'll continue to use the detergent analogy. You can have a detergent with different price points. You can have a detergent Pro Max that delivers that not just functional but sensorial experience. It smells nice, it lathers properly, it's good on your fabric, it doesn't wear or it doesn't chip off on fabric, it doesn't fade, it doesn't make your fabric fade. And then we have the mid-tier detergent that does the same thing. If the perfume may not be so much, but it still does the same thing. And then we have the lower tier. The chemical may not be so smooth on the hands, but it delivers on the functional benefit. It delivers on the baseline. So quality is a baseline that we cannot compromise. In the last couple of weeks, last couple of minutes, I've just shown you our consumer pulse survey and the reports. If you want more information about the full deck, you can get it here at Nigeria office at Pierrine-consulting.com. And I'm done.
Thank you so much, Rotimi. Thank you. What a rich picture of where the Nigerian consumers stand today. Thank you so much for showing us the data on happiness index and how there's a dip and there's recovery, the pragmatic spending shift, the rise of side hustle. You've been able to really paint a portrait of a consumer, of the Nigerian consumer who is adapting, calibrating, and in many ways surprising us with their resilience. And my question is, and I know that it's also sitting in the minds of everyone, why has the Nigerian consumer has to be resilient in the first place? Why? Why did they have to be so strong? And the sentiment we just saw, and Rotimi just, explained to us, does not exist in a vacuum. It's forged by the economic shock that Nigeria has shown us and we have experienced as a generation. And to really truly understand the brands and the businesses, what they must do next, is very important for us to understand the structural forces, that created this consumer's reality, that created how they are playing. That is where they are playing. And that is where our next speaker comes in. Wole Ogundare, as I introduced earlier on, is the founder and the managing partner of Carthena Advisory and is bringing deep expertise, in economic intelligence, financial advisory, and business transformation. It's going to take us behind the numbers. Rotimi has described the situation of the Nigerian consumer, the resilient Nigerian consumer. Now, Wole is going to take us behind the numbers. It's going to take us behind the numbers of happiness index, behind the down trading, behind the sachet. He's going to able to, he will show us the macro architecture that really explains it all. And that's it. Our next speaker is Wole. Wole, the floor is yours. Please blow us away. Thank you.
Thank you very much, Ibu. Good morning, everyone.
Eh,
It's always nice to be a part of these sessions.
We're always happy to
Um,
have you.
Thank you very much. I have about say 12 slides that, some of the things that Rotimi mentioned, you will see some of it in my own slides as well. Let me start off this way. Rotimi started off talking about COVID and how that has shaped the consumer index. Let me start off with how all Nigerians were shocked. There was a series of events that, sort of shocked Nigerians. They were called reforms. And over the last 18 months, we've had to survive these shocks. Those shocks they've led us to where we are today. Now, if you look at, May 2023, when fuel subsidy was removed, to Forex unification today, to the aggressive monetary tightening, there's one more I'll add. There's the Iran war going on that a lot of people the average Nigerian doesn't seem to think is really affecting them, but it will. And it has already started. Fuel, a few days ago when I saw it, was about 1,325 naira per liter. And if you look at the increase from a global perspective, increase of prices of fuel, Nigeria is the third highest after Cambodia and I think Vietnam. We're the third highest in the entire world. The thing has grown about 40% in under a week. We're the third highest. So with all of those hitting and battering the Nigerian from all sides, the Nigerian himself, will have to find a way, which is where all this resilience comes from. But first, I'll talk about that shortly. First, let's look at the macros, to see what is going on. Let me first talk about that GDP. That GDP growth rate of 4.07%, if you compare it to the per capita income of Nigeria, Nigerians have grown by about 0.3% in their per capita income. So whilst the headline numbers look good, the average Nigerian, the thing hasn't touched their pocket in any shape or form. Now, I fear for this headline inflation because of what is going on in the war, which is why I said we haven't started feeling it yet. There's a lot of ships being, stopped at the Hormuz area. And as long as that continues, this so-called stalemate that they're having, those ships, even though it's 20% of world's global oil passing through, there's a lot that passes through the food, resources, equipment, all sorts of stuff. And because Nigeria remains an import dependent nation, as we are, the challenge with that primarily is that the effects of those things will hit us in another 3, 6, 9 months, and it will hit us badly. So, before that war started, when I was putting this together, I thought, well, inflation may actually dip to single digits. I don't think so anymore. Because elections are also coming. If they're pulled back to January in 2027, then, those inflation numbers may not be very friendly. Our exchange rate, is dancing around, as at this morning, I think it was about 1390, 1395. So it's higher than this. The NPR is at 26.5, even though the access to those loans are very, very minimal. You'll almost bring your grandmother to get loans at this rate. We all know what it is in the banks. The food inflation, yes, it stabilized a bit. It was 40% in December 2024. It was about 8%. Obviously, following the rebase, it was 8% in January of 2026. It's moved up slightly to about 12.12% last month. This external reserve is something I always like to touch on. It looks extremely great, which is why I put it in green. But those are foreign portfolio investments. Their money is invested into Nigeria on a 3, 6, 9, and 12-month window. And this money is usually means the government, they're paying out huge interest rates on these monies that are coming. The problem is that the things that they're using these monies for, because when you issue bonds, you want to use it for something. Those things are not touching the masses yet, which is why you see the growth of the per capita income at 0.3%, extremely poor compared to this GDP growth rate being reported here. Oil is still at 1.58, still below the threshold of what it should be, and then minimum wage is at 70,000.